Happy Monday. It's nice and cloudy here today. We haven't had any rain. It's going to be in the 90s or hundreds this coming week. We haven't hit that mark yet. So we're here. I'm here in Cincinnati. Mark, where you at?
I am currently in Boca Raton, Florida, at the moment. However, Thursday I'm leaving and I'll be back, I think, at the end of July. So,
Where you going?
yeah, gonna be working remotely. So, that's what I love about it. So, first I'm going to, whoops, bear with me like that. Sorry, oops. You wanna, I hit that button by accident. You want to fix that, Matt? Sorry about that.
It's all good.
Oh, good. So I'm going to be flying out on Thursday. I'm flying out to Phoenix to look at a project, and then from there, I'm driving over to Palm Springs. That's probably about I don't know, about 4.5, 5 hour drive. Visiting my other half's mother for a couple of days. It's gonna be like 115. So I thought Boca's gonna be hot. So so then from there, I'm going to Lake Tahoe. Be up there for a couple weeks. Then going over to Seattle. Be over there for about 2 weeks, and then I think we're undecided if we're going to rent a car or fly. We're going to go to Vancouver, then into the Canadian Rocky Mountains. So this is a time of year where we just like to travel and get out of Florida for a little bit. But that's why I love real estate because I can work remotely from anywhere. Um, and I actually like going to the West Coast because I can start working earlier and be done earlier. But when I go the other direction, like when I go to like Europe or like Cape Town, I probably do in Cape Town in August. I have to start working at 4 o'clock in the afternoon because the time zone difference. So, but I don't mind it. I like it. It's just, but I love Florida in the wintertime. I love it here in the wintertime. So, um, but I do travel this time of year. So
Yeah, it makes sense. It's a good time to get away from Florida as everybody else is flocking to Florida. So I guess people flock to Florida in the winter too. So
we
you're
do. They're called snowbirds. There's a reason why we
snowbirds.
call them flock.
There you go. All right. Well, welcome in everybody. If you're tuning in over on the seller financing group, welcome in. I put a link down in the chat for you. If you would like, hop over on Zoom with us. This is a free coaching call for you to ask questions, to understand seller financing, so on and so forth. We have an expert on, he owns this group and he started this group so he could sell his deals. Started this group so he could sell his deals, right? So he must have had a lot of deals because this group's up to what, 130,000 now. So, Mark, go ahead and talk about your experience real quick.
You're off by 50,000. We just broke 170,000.
Oh, I thought it was 130.
170 we just broke. So it's all good. It's all good. But anyways, what was your question, Matt? I'm sorry.
Just tell us about your experience. Where, how long have you been doing this? So on and so forth.
So I started in May back in 1995 up in the Washington, D.C. area. That's when I really started doing it full time at the age of 24, 25. So it's 30 years now. 30 years and in probably a couple of weeks I started. Um, so I was green behind the years. However, I did do my first deal when I was 19. I grew up in a small little town in Vermont. To be frank, I grew up in poverty. My dad left when I was young. Um, and he did come back around later, but he left when I was young, and my mother had to raise me and my two sisters and myself, and I had to start working at a young age to kind of help. Um, whoops, sorry about that. I want me to turn my ringer off here so I don't keep. It's my VA sending me messages right now, my admin. So, where is that? Thank you. So, anyways, I started working at a young age and just had that worth ethic because then I just started just banging. I started out doing real estate banking a little bit. I had 107 loan officers that worked for me. And what happened was a lot of my clients were investors I became friends with, started surrounding myself with like-minded individuals. And I started doing some seller financing deals. First, I did the typical fix and flip, the renters, but then the market slowed down in 96, 97. So I started doing I started my strategy was called sandwich lease options. It's kind of like a wrap. That's what they're called today, wraps. But back then we call them sandwich. Just kind of stayed right in the middle. It's one of those things. So that's kind of how I originally started. And just started keep doing real estate over the years. I mean, you name it. I mean, I've had whole big teams with to nowadays I just have myself. I have a few VAs and I'm just very selective on my deals. I have quite a few deals in my pipe in my portfolio, but I'm just very selective. I don't need to go crazy and because I'm very picky and selective on my deals because I have so much deal flow coming in. Because for me, I look for a minimum of $500 a month and I like to get into my deals with very little money down to very zero. If I have to put capital out, I want my capital back in about 12 to 18 months. However, typically what I do is I like to use my end buyer's capital to take the deal down. But you do need some money for reserves. So you try to negotiate a really low down payment with my seller. And then I get a nice large down payment from my buyer, stay in the middle and create the arbitrage and control it through paper and contracts. That's really what my niche is. But it's creative seller financing strategies. But when I say creative seller financing strategies, it's many strategies. It's subject to is the big buzzword. That's one of them. Subject to sandwich lease options, novations, contract for deed, land con. So we have some people that just joined in that was on our weekly coaching call just before at 5:30. We had actually a pretty good group and it was good conversation that we had earlier. So I saw Karen. Karen was on. I see Karen jumping in and joining. So welcome back, Karen. How are you?
Thanks, Mark. Hi, how are you?
Very well. So thank you for joining us.
Thank you.
Cool. So Matt, I'll
Awesome.
let you jump back in.
Yeah, so I want to know where everybody's tuning in from. I know we got people from all across the country. We got people in other countries. We got San Diego. Man, you typed that fast. You must have had that ready to go. So, man, you're typing fast, even laughing. Good Lord. Man. All right. Over on Facebook, let us know where you're tuning in from. Zoom, let us know where you're tuning in from. We want to know what market you're in and see how we can help you. So, we got Greensboro, North Carolina. All right. We got Dallas, Texas. We got San Diego, California. I know we got some. Karen, have you moved yet?
Oh, not yet. Have quite a while actually. So we're still in Connecticut.
Connecticut still. All right, cool. Awesome. So we got Connecticut here. We got Oakville, Canada. Awesome. We got Garland, Texas. Awesome. So we got some, it sounds like some pretty good markets here, Mark, don't you think?
We do. All over. I like all markets. I mean, some markets are better than others, but yes, that's what you can do this stuff in any market that you're in. Just got to make sure that you kind of run your numbers. But anyways, yes, let's bring some questions on.
Yes, it's question time. So you guys feel free to hop on here, ask your questions. I prefer not to have to read them. So if you are over on Facebook, you can drop them in the chat or feel free to hop in the Zoom. And over here on Zoom, go ahead and unmute your mic and start asking away.
Hi, I'll try to do the first question if that's okay. I'm the San Diego guy. I found this one property, estate sale. The lady passed away, 6 acres. Out in rural San Diego, super cool. It's in probate though, and I was trying to talk to them about maybe doing some seller financing or something like that, but I'm just kind of like at a standstill because there's an existing house on the lot and it's not in the best condition. They don't think that it'll get past the appraiser, right? So now I'm like, shit, like I can't get approved for the rural financing because if the appraiser comes in, like he sees it, he's gonna think, hey, we can't actually loan on that. So like I'm just wondering, what if anything would you do besides find another property?
That's a good question. So where in San Diego are you?
I'm pretty close to like downtown San Diego. This
Okay,
this property is a little more rural. Mhm.
got it. Okay, cool. So how many in the like how many people involved? How many siblings or
So
beneficiaries?
it's non-court ordered probate, and I believe it's just the one son. I believe so.
Okay, all right. So they know that it's a bad piece of property, the probate
Mhm.
and the son, correct?
Yeah.
All right. So then that's going to be even better of an opportunity then at that point. So you should be able to negotiate a seller financing then because of that reason. The appraisal's not going to, you're not going to be able to conventional financing because of the way the condition is in.
Mhm.
So that is more of an open conversation to be able to have with them. Say, hey, I can't get financing. You guys know we probably can't get financing. So why don't we just why don't we structure something in a way where I make payments to you over 5, 7 years, and then we'll do like a balloon type of situation. And then I can take it and fix up the property over that time period.
Hmm.
So that might be an option. But
Okay.
do you have an idea what the property's worth as is?
Well, they're asking 385 for it plus 40 because there's an adjacent lot that's like another additional acre basically. So all total it's 7 acres. But they're kind of out of their mind just because like, I would have to put in like at least 100 if not like 120, 30. Like I do contractor work, so I'm not afraid of that, right? But it's like just the materials alone. I was thinking of offering them, somewhere in the realm of like 200 to 240, but I'm almost like that might be a little insulting towards them, but
You never know. Do you know what the ARV is afterwards?
of
Like,
having fixed it,
yes.
I anticipate that it would be right around like 550 approximately. Yeah.
So yeah, I would put together like, hey, this is how much money it's going to cost to fix it up.
Hmm.
Show them like, hey, the reason why this is the price, and and I have to put a lot of work into this property.
Yeah.
So I need a little bit of a discount for that reason. So you never know. I always throw offers out there that if I'm throwing an offer out there, if I'm making an offer, it's got to work for me. Yes, sometimes it's got to work for them.
Hmm.
Um, Now, if they say, for example, okay, they want a higher price, then negotiate 6 months with no payments or something.
Oh, okay. 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 I see. I see. Like maybe going up to that 300 potentially, but it's like, hey, you got to give me some
Just
time.
start negotiating. Like, this is where I'm at, and they come back and forth. Okay, I'll do this, but I want this is the price point, sell financing, but I want at least 6 months no payments because I'm putting all I want.
I got
You
to do some
want me
shit,
to put
you
all the
know?
money.
Yeah.
You want me to put all the money into this property.
Yeah. 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 Definitely. And then would you recommend after that's said and done and the property is fixed to then put it in like a conventional loan potentially after that? Or
You can. You got to run your numbers, see what your numbers would be if you're going to rent it out. If you want to hold it, rent it out. It depends on what your exit strategy is. Or do you want to sell and take the cash and
yeah, this
deploy it
would be
into
to
other
hold it
assets?
essentially. Like to hold it
Yeah,
for, the rest of my life essentially.
yeah. If you can, go for it.
Okay.
Hold it as a
Awesome.
rental.
Awesome. Awesome.
Do you have access to capital to be able to fix it up?
Uh, yes and no. I can get materials pretty cheap, and it would just be like myself like doing the thing. To like replace the roof and stuff, I do it like via my solar company and just like write it off that way. Get a little creative with it. Um,
Sure.
but yeah. Thank you,
Okay.
Mark.
Yeah, that's what I would do. I do stuff like that all the time, negotiate like no payments for a while because I'm putting all this money into the property. You want,
Mm,
Mr. Seller, you want me putting money. And if I stop making payments, I
yeah.
put all this money in the property, you get to take the property back.
Right. Right.
You
Right.
know,
Right. In better
that's
condition
kind
now.
of how
Yeah. Hmm.
yeah, that's kind of how I approach it. But um I you may have to get an appraisal to show what the as is value is, and then
Mm.
show the construction cost and kind of present it to them, and so they can kind of see the numbers that way. You may have to come to that.
Okay. Awesome. Thank you. I appreciate the advice.
Cool, man. Good luck with it. Keep us posted.
Awesome. Sounds like a good possible deal there. But
I like it.
I like it too. So if you guys have any questions, feel free to drop them in the chat or unmute yourself, ask away. Mark here has tons of experience, whether it's about investing or talking to sellers. Just yeah, the biggest thing is building the relationship, right, Mark?
I talk about that all the time. Actually, Karen, we were just talking about it earlier today on our coaching call. And what happened was one of the members in the program um, got a seller and and got a she got a seller, but the seller said, "Hey, reach out to my realtor." And what happened was the member, he's kind of a new member, went and got his realtor that had no clue about creative seller financing strategies, and went to the realtor, and they kind of started talking to each other, and the realtor was like, "Oh, I don't think it's going to work. It's probably got to be an assignment." And I'm just like listening to the phone call, the recording, and that was really our big discussion because what they should have done is gone directly to the realtor for the seller, because the seller's realtor is going to make more money in the commission, so they're going to work even harder, and you can convey it easier through one person versus two different people. But I always like to get everybody on a Zoom call or a phone call, the two realtors and then also the seller. But it really comes down to the seller and me about building a rapport. And I always say this over and over. When you're doing a seller financing strategy, and Zachary, this is something that you might need to do. Zachary, have you been talking to the buyer, the son, or you just been going through probate? Who you been talking to on that?
I've been talking to the you know, it's funny, I reached out to the realtor that listed it, and I actually haven't gotten much communication with her. So I just found the guy, the son's his number, right? So I just called him directly. Um, yeah, that's basically who I've been talking to.
Okay. Because that's the number one thing. Because when you're doing seller financing, and this is the key to it, it it's a marriage. You
Mm,
have to treat it like a marriage. So the first time that you're having that conversation with them, think of it when you're dating your significant other. You're getting
right.
to know each other.
Yeah.
You're getting to know each other, and you want them to know you.
Hmm.
It's a relationship, and they're going to do business because they like you. They might be
Hmm.
getting phone calls from the other like wholesaler or like whatever it may be. But
Right.
even if you're doing business and you're going through realtors, treat the realtor the same way as the seller. You want it, it's all relationship building.
Mm,
And that's how you get zero down deals because they're going
mm,
to tell you the motivation and they're going to explain why. And then you're going to understand how to be creative enough to come up with solutions to be able to get those deals down. Like I had one deal not too long ago. Well, actually, I talked about it a little bit, but this guy was open to seller financing and he wanted $30,000 down, but it was only $128,000 for his home. And he
mm,
had over 12 offers from all these other investors. And I found out what his problem was. He needed $25,000 for a camper, and everybody else
mm,
was beating him up. So I built a rapport with him. I understood that he had great credit and he banked with a credit union. I told him to go take a loan out at the credit union for the camper for the $25,000. And on the 20th of every month, I'll automatically make the payment directly to his camp for the credit union to make the payment on his behalf. And we're cash flowing $475 a month. That's just one example. But because I spent a good 35 minutes, 30 to 35 minutes building that rapport with him and him getting to know me and I'm getting to know him, he was open to it. And we got that deal for $3,500 down. I gave him $3,500 for some spending money and he took a loan out for the camper. That's just one example, but there's much more into it because I also had him visualize before I went there. Tell me a little bit about camping. Who's going to be there? What's it like waking
right,
up?
right.
So he's visualizing himself camping. So I
Hmm.
took him on that journey.
The
So you got
emotional
to
fit.
understand.
Yeah.
Yeah. So when you're doing creative seller financing strategies, it's all about relationship building. It's the number one thing. The numbers and once you learn the stuff, it's repetition. But if you have the art down, and then 70% of my deals come from follow-up. Where I present an offer, they usually say no. I put in my follow-up system and they come back around. I call it the boomerang. I throw it away and it comes back. If it comes back, it's going to be a good deal for you. So you just need to do enough offers so they come back around. That's really what it comes down to. So that's really, you got to build a rapport. That's the number one thing. If you build a great rapport with the seller, they'll always come. You'll get those deals because they're going to do business with you. And that's why I love tired landlords, people that have owned a property for 12, 15 years plus and they're tired. They like that passive income because they don't want to get hit with capital gains and everything. But if you build a rapport with them and they understand where you're at because they were where you were at one time and they want to give you the opportunity, they're not so greedy. People that own a property for 5 years or less, that's an investor. Don't waste your time and energy. There's no meat left on the bone. They're greedy. They usually need that capital and they're rolling it into another deal. So keep that in mind. That's what I've always found. If it's an investor that had a property for 5 years or less, unless they're financially, they got into a bad situation to fix and flip or something like that. But typically, there's no meat left in the bone. But the investors that own it for 12, 15 years plus, those are great, great deals. I love working with those guys. And then also build up your referral network. We talked about that. I have over 600 bird dogs that keep feeding me deals. So um, Edwin, Edwin's sitting there trying to he's structuring a what kind of car was that, Edwin? Like a Camaro or a Mustang? Like he's structuring a creative deal on a Mustang. It was a beautiful car, but it wasn't for me, but I like it how he was kind of talking about and structuring it. That was pretty slick. So Edwin's in the program as well. So
So you might be hearing Mark talk about a program, right? So Mark has a mentorship where he'll teach you how to seller finance. It's group coaching calls currently. We're currently building out a course with for every single type of seller financing. That way you can go in there and learn how to do seller financing yourself. But the coaching calls are so important. That's where you really learn the big nuggets because that is I mean it's kind of like this. I mean you get direct access to Mark and that's where you learn how to talk to sellers. That's where you can sit and listen to conversations that you've had that you've recorded and he can give you feedback on them and you post it in the Facebook group and so on and so forth. So if you guys would like more information about Mark's program, I'm going to put a link in the chat. Schedule a call. See if it's a no sales call at the beginning. We just want to see if you're a good fit for the program. We want to make sure you can take a there we go. It wasn't working there for a second. We want to see if you can take advantage of what we have for you. We don't like to take advantage of people, so we want to make sure that it will actually work for you. So
the biggest thing on that is we have you bring your deals in. Everybody brings their deals in. If they don't have it under contract, I tell them not to bring the address, but they bring the deals in and we actually analyze and break down their deal and we go through it. Like, so when they bring a deal in, there's two things I always want to know. Why are they selling and what they're planning on doing in the capital? Because if you understand those things, that's how you can be creative enough to solve the problems. Just like I was explaining to Zachary, I found out what that seller, why is he selling? Because he wants to start to go camping, he wants to go and how much capital does he need? If you understand those two things and how to solve the seller's problem, that's how you get these deals with very little money down. And then often in that deal that I explained to Zachary, where we gave the seller $3,500 down, I went in, we found a lease option buyer, and the lease option buyer put $18,000 down. So out of that $18,000, we gave the seller his 3,500. So you can see the difference, how much money we made in the spread. And then we usually put 3 months reserves away. So if something ever happens, we have that reserve. So we stay in the middle and we're cash flowing $475 a month on that deal. So that was just an example. So Edwin was saying that was a 58 Thunderbird to buy a yacht. Oh, guess the seller was trying to buy a yacht.
nice. Awesome. So, guys, schedule a call. It's a good opportunity for you to figure out if this is the right journey for you. Now, some people might not want to do seller financing, they want to do something else. We understand, but seller financing is a great source to get in with lower capital out of your pocket. I mean, Mark, what are you doing? Like, on average, what are you putting down per deal?
5% or less. I try to get zero down deals. That's typically, I'll put like $100 down to lock a contract. It depends if there's a realtor involved and stuff, but I usually will just put some monetary money down to control it. And then what I like to do is I like to do a long inspection period, like 45, 60 days, even 90 days sometimes. And I tell the seller, hey, you don't have to rush out of the property. We can kind of close and we move forward and convenient. And then I tell them exactly what I'm going to do. I'm going to put my tenant buyer into the property. And then I go out there and find my tenant buyer, have them drive by the property. And oftentimes I will have my buyer lined up and use my buyer's capital to take that deal down and put money in reserves. So I usually will make money on the front end. That's why it blows me away. Some of these guys do wholesaling, and I'm like, they're making what, $10,000 on a wholesale deal when you can make that money plus a little bit more in cash flow and then get the money in the back end. That's what I like about it. So like one of my people in the program was going to do a wholesale deal on a seller financing deal, subject to actually, and she was going to ask for 15,000. And when it was all said and done, she was going to be happy with $8,000 to $10,000. Well, we went through the whole analysis on that, and she ended up making $171,000 the way we're structuring it. $171,000 over 5 years. It made $12,000 on the front end. So that's what I like about that. All right. Somebody's got a
Sarah has
question over there.
Yeah, Sarah has a question. Can you talk about the differences, the pros and cons between using a lease option versus a contract for deed?
I like them both. Oftentimes, the state plays a role into that one. So like if it's like say California, New York or something like that, I prefer a contract for deed because of the maintenance repairs. But anyways, let me kind of go through it. In Florida, I most of the time I sell my properties through a lease option unless a buyer is going to put a lot of capital down. If they're going to put more than 10% down, then I'm going to do it more of an agreement for deed or contract for deed. Because like, you know, and they're going to be taking care of the property because if anything ever happened and it went to and you had to foreclose on them and you took more than 10% down and it's non-refundable and you go in front of a judge going to look like you're borderline predatory. So that has a big factor into it. But lease options, for example, if they default in Florida, I can get them out in about 45 days. A contract for deed can take a little bit longer. It's almost sometimes depending on state can actually it can take as much as time as a regular foreclosure. A contract for deed, I like also. Like I love buying prop. For me, if a seller is not financial distress, I never pitch is subject to. They're going to look at, hey, Mr. Seller, transfer the deed over to me and keep the mortgage in it. They're going to look at you like you're crazy. So I love doing a contract for deed. It's the exact same process. In my contracts, I get the tax depreciation, I get all the write-offs and everything in my contracts when I'm buying it from my seller. Um, that's kind of that's one of the good things I like about that one. Um, and usually on a contract for deed, you can get a little bit more money down. If putting less money down, then I'm going to do a lease option. Um, so there's a lot more going into it, but typically the down payment plays a big factor, and then the state sometimes. Like if I'm doing like California or one of those states, I'm probably going to do a contract for deed because they're 100% responsible. Because some states can borderline like um, as a lease option and like um sometimes the state if you go to evict the landlord tenant law comes in place and if they put money into that property for maintenance repairs you could get stuck reimbursing them that on a lease option. It depends on that state. um, I'd always recommend trying to work something out with the people, the buyer and the property if they default, and just screen people up front. And the other thing for a contract for deed, keep in mind, if you're putting a homestead buyer into the property, you have to run them through a third party RMLO, especially if you have anything that has rates and terms and stuff like that. Versus a lease option, you don't have to. But I'd still recommend having a loan officer look at them because you want to make sure at the end of that term, they're going to be able to purchase that property because I want my people to purchase a property. And it's such a good feeling when you put somebody into a property and they finally purchase it in 3, 5. I have two of them right now that I'm doing. I have one in Alabama. They've been there for 4 years. They're in the process of purchasing that property right now. Actually, Rob is handling that. Rob's getting a lot of business from us. And then I have another one where I had a property as a rental. Now I'm selling it and I'm selling it to them as well. So, but typically I love where they become homeowners. I want them because it's like, and it's a different type of tenant because they take pride. I had one tenant buyer spend $7,500 to put a whole new deck on the house, and they technically didn't own it yet. It was a lease option, and they end up purchasing that property. So, Sarah, do you have any more questions on that? A little bit deeper. Hopefully, that answered some of that.
Real quick, I don't know who Period is. Can you unmute yourself and ask about your question? Can you explain the strategy, how this strategy works? I'm not sure who Period is, but if you ask
I
that
don't know what it
question,
is.
can you explain how this strategy works? I'm not sure which strategy he's referring to. Driving, okay.
I don't know what he's referring to.
Well, I'd rather you be talking instead of texting while
She's texting
driving.
and driving. I know
I'd rather you be talking instead.
it's all good. I don't understand, but it's good. So hopefully that helped out.
Okay.
Cool.
All right. She said that was great. Awesome. All right. So, when it comes to seller financing, what is the biggest struggles most beginners face without realizing going into it?
Repeat that. What's one of the biggest?
What's one of the biggest struggles a new person, like a newbie, faces when going into it that most people don't think about?
I would say, well, they get the shiny object syndrome. They start learning something and they go down another path. That's probably one of the biggest thing. You want to learn one strategy and then kind of get that strategy down. I would say the biggest struggle is they go into it and they're just trying. They're trying so hard to get a deal, and people can sense it, the sellers, and they're going to try to want a higher cost as much as possible. Um, I'd say that's probably one of the biggest struggles, and then just making sure you understand how to communicate with a seller and understanding the seller's motivation. I think those are the two big things on that. That's kind of what I feel that's the biggest struggle, because once you go through some deals and you underwrite them, it's simple. It becomes easy. A lot of times people get afraid of it, and a lot of times people freak out of the contracts. Those are the type of things. But I would say, especially with nowadays with AI stuff, it's so much easier to start underwriting deals. It's really helping a lot. But I would say the biggest struggle is just talking to sellers and listening to the sellers and really understanding the seller's motivation and how to solve their problems. I would say that's probably one of the big things. Actually picking up the phone, making calls. You got to pick up the calls. And then um, also, I would say mindset. I always assume mindset, like people are positive because I surround myself with like-minded individuals. But if you're around people that don't think like you and they're always negative and there's drama, you got to separate yourself from those type of people and really surround yourself with some really good positive people in your life. And if people are negative, they're going to suck you down. You want to be around people that's going to lift you as they grow. You want to find somebody on your same level, and you guys got to kind of grow with each other and learn from that process. That's kind of what I kind of really recommend. So, Jay's got a question.
Hey Mark, how you doing, Matt?
Hey, Ben.
Oh, mic down. Um, Seller financing and closing. Do you prefer, I mean, sometimes the seller wants to use their closing agent, or would you prefer using your own closing agent with regards to the deal?
Doesn't matter. I prefer using my own that they understand the strategy. It depends. If it's straight seller financing, it really doesn't matter. If it's going to be a creative seller financing like a subject to, then you need to make sure you have a title company that understands that process. But it doesn't really matter. Just make sure you interview the title company properly. We have a couple of national title companies or closing agents, so if you ever need some people, just let us know. We have a whole a Rolodex of people. But I don't see that being a problem if it's straight seller financing at all. It just, as long as they know what they're doing, it's pretty straightforward. The seller becomes a bank. One of the things I like to do, though, if I'm buying a property through straight seller financing, I want to make sure there's no due on sales clause in there if I'm buying it from a seller, because you're creating the whole mortgage note and the deed of trust and all that good stuff. So, yeah. So, why are you asking that question? What do you think? What's your thoughts on that?
I have one. I'm in the negotiating stage right now with the percentage that they want. There's really no cash flow. The cash flow would be negative, so I've got to go back and negotiate on the interest rate. He wants a 10% interest rate, $25,000 down. However, the payment is about 1974. Then after I add in the insurance and the taxes and HOA and everything, um, it comes up negative. There's a tenant in there that's paying about $2,500, but everything comes up to about 26 something, about $2,700. And I don't want to have negative cash flow. As a matter of fact, I typically don't even want to do a deal unless I've got $300 to $500 in cash flow myself. So,
That's why I don't like dealing with investors. That's an investor right there. That's why he wants 10%. You got to
yeah,
go direct to like a more of a seller that's
right.
motivated type of thing. Unless it's somebody that is own it for like 12, 15 years. And it sounds like he hasn't. Otherwise he wouldn't be so greedy on that interest
Well,
rate. He would want to,
actually, it's supposed to be free and clear.
well, then he's just being greedy.
Yeah,
And say that. I mean, the numbers got to work. Would you buy this
right,
property? Like
right,
he knows the numbers are going to work. He's just trying to find that newbie investor that's going to take it and then take
right,
that money. And then if he takes it back, type of situation. So just be
right.
cautious.
Okay.
You know. Somebody asked the question, and you want to jump on Zoom and ask your question live there about the hybrid deal. Who's that? I'm trying to. Is it?
Brendan.
There
Yeah,
he
hey
is.
Mark, can you hear me?
What's going on, man? How you doing?
Good, good. Yeah, apologize if this is very beginner-ish, but
Worry.
I kind of understand the principles and the concepts behind seller finance. Yet to do a deal, so I'm looking to kind of get my first deal done. But I think the piece that I'm struggling to wrap my head around is if you do a seller finance deal, but there's a remaining mortgage, um, is that like I understand the seller finance piece between the purchase price and the remaining mortgage if that's how the seller wants to do it, but am I also, is that also kind of like a subject, taking the property over subject to as well and making the mortgage payments every month as well?
You can. It's I don't know that's the big buzzword out there everybody's talking about, but if the seller's not financial distress, I would never pitch a subject to. I mean, I can't tell you how many people in the program that we go head to head with other people that do just straight subject to. We end up getting the deal because we're like, why would you want to transfer the deed over? It all depends, that type of situation. But um, a subject to is you keep an existing mortgage in place and purchasing it. I highly, highly, highly recommend if you're going to do that to put it into a trust. So it helps with the due on sales clause. It doesn't stop it, but it just kind of camouflages it a little bit on that. And then the hybrid means like if the seller's got equity in it. So let's just round it up. Let's say it's a $300,000 you're buying it for, right? And say there's $200,000 on the mortgage, the current mortgage in place. So there's $100,000 left over. So let's say you put $20,000 down, then there's $80,000 left over. So then at $80,000, you'd be paying the seller like a second mortgage type of situation for that difference. Does that make sense?
Yeah, makes perfect sense. I guess to me it's I'm stuck on like the technicality piece of like who's actually making the mortgage payment, right? So
Well, I'd always recommend you making the payment directly to the. So what I usually do is in the seller's loan portal, I always create a separate Gmail just for that property, and you and the seller both have, because they want to make sure the payment's going to be made
right.
for the credit, and you want to make sure the payment's going to be made and they're not taking the payment and put it in their pocket, because I've seen it happen both sides. So what I always tell people, hey, we'll create a Gmail account, like we'll call it 123 Main Street at gmail.com, and every time there's a notice or any email, it gets forwarded to the seller and it gets forwarded to my bookkeeper or you. So and then at any time you guys can log into the portal and see what's going on. So I always have my payment, if it's due on the first, my payment automatically goes to that lender, make sure it's paid for that. And if there's going to be a second mortgage, then you send that directly to the seller for the equity difference on that one.
Does that mean the deed transfers once the mortgage is then fully paid
A
off?
subject, yes, and a subject to it is correct. Your transfer, but the lender can call the loan due. Do you know what a due on sales clause is?
Yeah, you'd have to make sure that the bank doesn't want the funds because the transfer of ownership has taken place.
Yes, in the 80s they put a clause in there if the original borrower, the property is no longer in their name, they could technically call the loan due. And nowadays some of them are technically doing it because they're doing. Do you know what an assignment slash wholesaling is?
Yeah, I do. Yep.
Yep. So and so it was always designed for us investors to buy the property and stay in the middle. And if our end buyer starts making payments, we would step up and make the payments. That's normally. And tip right now, because of the assignments going on right now, everybody's doing assignments and they're not qualifying the end buyer correctly. The default rate on subject twos right now are 19%. It's never been that high in history. It's always been below like the conventional FHA conventional. The FHA right now is at 3.5. It's always been below that because in the past, us investors would always step up and make the payments. But what's happening is these guys are just doing assignments and walking away from the deal and not qualifying the end buyer, and the default rate's happening. So that's why some of the lenders are really looking at it, because it costs them more money to foreclose on that deal, because you have that buyer that they originally did the loan. Now you have the new one. So it costs them more money to foreclose on that. So that's why they would rather call the loan due. If they call the loan due, you just transfer back to the original seller's name or refinance it. There's easy ways around it. But anyways, yes, you transfer the deed over to you. Again, you can still buy properties, keep the deed in the seller's name and still control it. I like to put it into a trust. So then inside the trust, you can kind of control it.
Got it. That makes sense. So once that's all set in place, I mean, is there, I mean, what would be the level of risk exposure to me as the buyer?
You just, if your loan gets called due, that's all it is.
That's it.
It's
Okay.
it's
Yep.
if it gets called due, you gotta pay that loan off, that existing mortgage with the you can refinance it, or you just transfer it back to the seller, and that's where you can do one of the other strategies like a sandwich lease option. Um,
Got it.
they're pretty easy to work around. That's why I'd always recommend putting it into a trust, because if you transfer it into an LLC, then it looks like it's more. Oh, what's going on over here? The other thing is you got to make sure the insurance is done correctly, because that's what used to always trigger the due on sales clauses, because insurance is not set up correctly. That's where, because the mortgage company is going to get a copy of that insurance, and they're like, oh, what happened to Mr. Borrow Smith? He's no longer on here. Oh, and then they start looking at the deal and looking at the transfer, and that's what triggers the due on sales clause. So you always want to make sure it's set up that you have the original seller's name in there, and then like the trust name or your buyer, little things like that. So that's no big deal. But that's where a lot of rookie mistakes happen.
Okay. Got it. Super helpful. Thank you.
Yeah, absolutely. But it's a good strategy. Like if I'm putting a lot of capital in a property or I'm being a mortgage current, then I'm doing a subject to all day. If they're not financially stressed, then I'm doing one of the other strategies. And I still control, I still get the tax appreciation. I still can control the deed, even though it hasn't been transferred yet. There's different ways of doing it. Cool.
Great. Thank you.
Yeah, definitely educate yourself and learn. And have you done what's your background? Are you just starting out?
Uh, Sort of. I guess I would consider myself one of those taboo words as a private money lender, a transactional lender. Um, Other than that, don't really have any, kind of investment type of properties, but
Yeah.
looking to utilize,
Typically,
things like
yeah.
depreciation, stuff like that.
Absolutely, you can do it that way. T t Typically, what happens is people are do it traditionally, like what you're mentioning. They get roughly about 4 to 6 properties, and they put 25, 30% down. They've run out of capital. All the capital is tied up in the assets. So that's kind of when they start learning these creative seller financing strategies, because you can get into these properties with less capital. You can negotiate and close faster. You don't have to worry about all your credit being pulled. It's just so much easier. But it all comes down to the relationship that you build with a seller. You got to think of it like a marriage. That's what I tell people. When you have that conversation, get to know each other. They're going to do business because they like you. You want them to know you. You're interviewing them. They're interviewing you to make sure you're going to do what you're saying, and you're interviewing them to make sure they're not a crazy seller. Because I've had those. I've had some crazy sellers. You know, like the hybrid deal, like you're talking about. Like if I'm making a payment to the seller for $80,000 over like amortize at 30 years with a 7-year balloon or something. I had this one, the payment's supposed to be there on the first. She'd start calling me on the 18th. Where's my money? I'm like, you still got another week and a half to go. That type of situation. So, just you want to, and I do. I've turned deals down because I don't want to deal with a nightmare seller. So,
Okay. Got it. Thank you.
cool, cool.
Awesome.
Good luck.
All right, real quick, can you just dive in and explain what a lease option is, just in detail one more time?
A lease option, I love. That was my first strategy that I started out when back in the 90s. That was my first one. So it's a rent to own. That's what it is. You agree with a seller with a price, you agree with a monthly payment, you agree on a term. My home here, I purchased on a lease option. So in 2010, I was unsure if I was going to buy this property. I negotiated with a deal with the seller, locked into a price. Um, Great deal, and then we just kept renewing it. I had a great relationship. And in 2015, he came down with stage 4 cancer. I closed on it. I had $57,000 of equity in my property right here when I finally closed on it because I locked into a price, but I still stayed in. And then I also structure it in a way where I can do a sublet where I can put somebody else into the property. And that it's a great strategy to start out that's safe because the deed's still in the seller's name and it's a lot less risk for the seller. And it's just like it's a lease agreement and it gives you the option. So if the property value drops, you can walk away. I will do a lease option. Like if I have a seller that is adamant and they only want to do a 3-year term and I'm concerned that the equity is not going to be there, I will do a lease option because if the equity is not there, I can hand the property back to the seller and walk away. You know, hey, I made all this money during the process, but the equity's not there, and I could just walk away. I've done it a couple times, and most of the time I just renegotiate for a longer term. And usually what I'll do is if they want a shorter term, I will produce an amortization schedule and send it over to them and on a PDF. And I'm like, hey, Mr. Seller, um, you're selling it for this much price. Let's go down to line 120. That's 10 years. How much money would you have collected? I did one not too long ago where I did this exercise, the same thing. They wanted a 3-year term and I knew I wasn't going to do a 3-year. My minimum was 5-year because I was paying top dollar. I'm willing to pay top dollar for a property, whatever the value is, as long as I'm willing to get terms. If they want less than 5 years, then I want some equity in that deal because I want to be able to make sure I have some equity in that deal at the end. But as long as I'm getting terms and I cash flow, I don't mind paying exactly 100% of that value. But I have to look at the numbers. But in this case, is we went through the numbers and I showed them how much more money they're going to make. I said, how much money would you collected? And then the amount payoff, they're making $179,000 becoming a bank over 10 years. And I showed them that. And because of that, they're like, oh yeah, I'll do a 10-year term because it's secured against an asset. And quite frankly, they want me to default after 5, 7, 10 years. That property's appreciated and the mortgage is paid down. I won't allow that to happen, but because that's one of the things they worry about. Oh, am I going to take the property back? I mean, honestly, you want me to default, but I would never allow that to happen in all my years. I've never allowed that to happen. Now, I've had my buyers stop paying a couple times, and I stepped up and I kept making the payments. And that's why I always take my buyer's down payment, tenant buyer or whatever. I always hold reserves for that particular reason. Can't hear you.
Yeah. Now, Mark has dropped a ton of info tonight. Blowing up brains over here. I don't know if Killer. Yep, I agree. Killer. I agree. He is doing this 3 times a week. 2 times in this private group, 1 time four. Well, 2 times personally.
You're right. I'm sorry. I'm confused.
Yep. So we got 4 coaching calls in general in the private community, and then he does 2 of them, and he's dropping knowledge like 10 times bigger than this. I mean, a lot bigger than this, and it's crazy because he is so meticulous or so particular on certain items that makes the big difference when it comes to making a deal happen. So, and he helps you through every single item. So, guys, if I'm going to put the link here, schedule a call, see if it's a good fit for you. It's um it's no hassle call. It's just to see if it's a good fit. You'll hop on a call with Reese and he'll help you out and you'll then schedule a call with me after that. Super simple and easy. And then we got another question. You ready?
Yep. Go for
All
it.
right. Sarah's got a question. Can you make the buyer responsible for maintenance in a lease option?
Yes, you can. And I always put it in agreement. But be careful, and I don't want to get political. Just be careful, not a landlord-friendly state, because I've seen it happen. It happened to me one time where the judge, um, because it's a lease option, landlord-tenant, they made me reimburse them. That happened years ago. So what happened was you usually do a lease agreement and you do a purchase and sale option agreement. Well, this couple stopped paying, and my attorney was like, "Oh, I could have paid them $10,000 to leave." Sorry, and my attorney went in like, "Oh, we can get them out, no problem." And I should have done it, but what happened was when they went in the state, they automatically, when you go to evict somebody, they automatically get legal aid. The state pays for the attorney. and this legal aid attorney kicked my attorney's butt. So they went in and said, you know what? Can we, Your Honor, since they want to evict, can we just throw out the purchase and sales contract and just do the lease agreement? And my attorney's like, yeah, we can do it. So they threw out the purchase and sales contract. And once they did that, the maintenance and repairs was in the purchase and sale. Then it became landlord tenant law. And I had to reimburse them over $26,000 of receipts, supposedly they came up with. So be careful of that. So what I do now is, so let's say I want $2,500 a month in my lease agreement. I'm sorry, say I want $2,500 to come into me. In my lease agreement, I'll go ahead and put 2,700 in 2,750, and then I'll credit $250 back for maintenance and repairs. So I'm still getting the 2,500, but if anything ever happened, look at they're getting $250 a month for maintenance and repairs. So I tend to do that. The other thing, what I'll do is if it's an older home, like say 15, 20 years more older, I will buy a home warranty package for the first year, because you're taking that tenant buyers all their money down. So if something goes wrong 2 months later, they're not going to have any money to be able to fix those repairs. So that's why I use like a home warranty. It's like $500, $600. It's so worth it to have the peace of mind, like for one of the big appliances, AC, hot water, whatever it may be. So keep that in mind. It's so much cheaper buying that. Do that. Now, a friend of mine, what he does, and I thought about doing this, I haven't done it yet. Um, let's say you're selling that property for $250,000. Well, what he'll do is he'll put on a contract, oh, I'm going to sell it for $275,000 and give them a credit of $25,000 towards maintenance and repairs. So that's another way of kind of protecting yourself. So if they do default, look at this is what the purchase price was and they got a credit. So hopefully that helped you a little bit, Sarah. Just be cautious in the state that you're doing it in. Okay. But I love lease options. It's one of my go-to. A lot of people don't like it, blah, blah, blah. And just make sure you screen them. Make sure, for me, I like people in homes. I like to buy in nice neighborhoods and near nice schools, because I like to um I like to put families that have children in there, and they want the children to grow up in that neighborhood and they don't want to keep moving around. I would not recommend it in a war zone area. War zone, you tend to have headaches. Nice homes, you tend to get better people, and they want to take care of their property a little bit better. And then what I always do is whatever the median price range is, I always go 20%. And Karen and I were just talking about it earlier. Um, Whatever the median price range is, I always go 20% above and 20% below. So let's say the median price range is 250,000. My max is 300,000 and my low is 200,000. I will look at things below 200,000 because it could be just a home that needs a nice area, but it needs work. But most of the time, it's going to be in a war zone. And the reason why I don't go higher, let's say, for example, the median price range is 250, but I have a seller that's open to 475,000. Oh yeah, I can do seller financing 0 down. That's great, but it's so difficult to try to find a buyer that's you're outside that price area. So that's why I like to stay whatever the median price range for the area, 20% above and 20% below, because that's where your buyer pool is. It's going to be easy for you to find a property or find a buyer for that property, because you can find seller financing deals all day long, but if you have a problem not covering putting a tenant in there, in a high area, and say the lease is, $2,500 typically for that area, and you're trying to get 3,500, $4,000, it's going to be hard to put a buyer in that property. Cool. Hopefully that helps, Sarah. Um,
Awesome.
what is that? Somebody put some spam in there?
Where?
Yep. Let me get rid of that one.
I didn't see no spam.
You know how much spam we get in a seller financing group a day? We're removing between 200 to 400 spam junks a day.
Yeah.
Crypto, like that one right there was a retirement one. We got two
Oh,
full-time people. That's all they're doing is just keeping that group clean.
yeah. Yeah. All right. We got one more question. What's your exit strategy when you do seller financing? To own the property or to sell?
It depends. Every deal's different. Like, let's say a property needs some repairs, and I don't want to do the repairs. Let's say it needs $35,000 of repairs. I will sell that as a handyman special and then give them access to the deed, because they're putting, so that way I'm controlling more of a note. If it's a multifamily, I want to hold that one so I can have a property manager. But typically, I like nice homes, nice areas, buy it through a seller financing strategy and sell it through a rent to own strategy. That's typically what I like. Those I just put on cruise control, get nice screen to people, and just that's kind of what I tend to do. It's like it depends on the asset. It really does. It's just multifamily stuff with many doors I want to hold. I like single family homes in nice neighborhoods. I like buying it through a seller financing strategy and sell it through a seller financing and just create the arbitrage, create paper. And I don't have to worry about leaky toilets. And I still make the same amount of money. The only difference is, and that's why I like selling it through a lease option because I get the depreciation, even though I pass the maintenance and repairs on to my seller. If property needs a lot of work and I'm not putting it in, my end buyer's putting a lot of money into that property, then you want to give them some type of control of the deed because otherwise, if you default, you could look like you're a predatory investor if you ever go in front of a judge. So you just want to do the right thing. Just be fair, always be yourself, be genuine, and do what's right. If you do what's right with the seller, do what's right with the buyer, and you're going to come across moments where you're going to be in a situation where you can end up making $50,000 extra being a dirtbag, if you will. Do the right thing because it will come back around.
For sure. All right. Well, we're
Yeah.
rounding
Let,
out
let
to
me
the
give you
end
let me
here.
give you an example. Let me give you an example. I sold a property, just so you have an idea. I sold a property in a lease option to a seller. So I bought it for 179 from a I bought it from 179 from the seller on a sandwich lease option. And the market rents were 1350. I negotiated down to 1200. And I also do it like to the seller. I always tell the seller, as long as I make my payments on or before the due date on a lease option, I get $150 credit applied towards the purchase price because I wanted to come down. So that's how I structured it. And I went and found my end buyer. So I put $100 down, negotiated the rent down to $1,200 a month. So it only cost me $2,400 to get into the property. But I told them I'll give them $100 now, and the remaining $2,300 I'll give when I take possession of the property. Went out and found my tenant buyer. My tenant buyer um, lease rent was, I think, 1550, I think, or something like that. Um, and and they put a little bit more than $11,000 down. So at $11,000, I had to give the seller the remaining balance of $2,300, and I cash flowed, I think, 300 to 350 a month. I don't remember exactly the numbers. I was a 30-month contract. Sold it to them for 214. And what happened was when I sell it to my end buyer, if they're going to exercise the option, they need to let me know 90 days prior. Well, what happened was at day 40, we're coming to the end of the option, and they never notified me. It was they had day 45. Now, granted, they broke the lease agreement. I mean, they broke the option agreement because they didn't notify me. I reached out to them. I said, "Hey, are you going to buy this property?" I'm like, "Yeah, yeah, yeah." I said, "All right, reach out to so and so loan officer, make sure you get this going." Now, I sold it to them for $214,000. That appraisal came in at $264,000 or 265,000. There's $50,000 difference. And I could have been a jerk. Hey, you know what? You breached the contract. But these people are good people. In 30 months, I've only communicated them twice because we had some hurricanes come through. And we want to make sure I reach out. Hey, there wasn't any damage to the property, was there? So, so you just want to always do the right thing. So it worked out. The seller got her money. I made my profit. I made a little bit more than 50,000 when you add the numbers up. And my buyer, they got a great deal. They had $50,000 of equity. That was a home run for them. So always do the right thing. Cool. But this was great. Very good. So, all right.
Awesome.
Guess we're
Rounding it out. Any one last question or no more questions? We're good. It's been a great night. Lots of good questions. What do you think, Mark?
trying to kick this cold. Got this cold that's been happening. I don't know what's going on. I think you got it. Something's going around. I'm sure a lot of you guys had it, but it's the spring cold. So next week, where will I be doing this call from? I think I'll be in Palm Springs, California, in 115 degree.
150 degrees.
115 out in Palm Springs. I'm not looking forward to that. We're only going to be
Oh,
out there for a couple of days.
are you going to have your
The
laptop
desert.
with you by chance?
Oh, I'm gonna be bringing it with me, 100%.
Okay. Well, I might not be able to be on next week. I have to talk to you about that later. So, but you can
Cool.
handle it. I believe in you.
Sure, we can figure it all out.
All right,
Good night,
guys.
everybody.
Any more questions? Karen, you got one more question?
Thanks, guys.
No? Well,
Nope.
thank you.
Aaron, you know this week she jumped off. I was gonna tell her she knows. We're
No, she's
moving
still in here.
oh, she is still here?
Karen?
Yep.
I'm here,
Karen,
yeah.
you know we're moving this usually Thursday from 3 to 4. We're moving it to Wednesday because I'm flying out to Phoenix to look at a project. So it's Wednesday from 3 to 4, just this week only.
Okay, it's on my calendar. Thank you. That's great.
All right. We will see you on Wednesday.
All right. Thanks, guys.
Perfect. All right. Thanks, everybody. Have a
Bye-bye.
good one and enjoy your week.
Take care, guys. All right. Whoops, shoot. Don't want to do that. All right.